Welcome. Today I have a special guest. Thank you for visiting my channel. It's Karli Spahr. Now you might remember Karli from previous webinars or presentations. She's an expert in her field. She's been doing loans for a long time. I'm going to let her tell you a little bit about her background in just a moment. Today it's timely because FHA has just made some changes, and those changes will help you, the consumer, or if you're a realtor watching this, it'll help your buyer get more as far as financing. I don't want to steal Karli's thunder. So Karli, tell us about the FHA change. Tell us who you are, the FHA changes, and how you can help buyers today.
Yeah, so Karli Spahr with the Spahr team, and to your point, yeah, I've been doing mortgages care than I want to admit, longer than I want to admit anyway, but a while. So we've been through lots of changes, and FHA made a great change for the better for buyers, kind of stepping back in time a little bit, back to the old MIP that we had. So instead of, when I talk about mortgage insurance factors may not mean a whole lot to everyone listening, but I can tell you the factors almost cut in half, pretty close. So some major changes that are going to make FHA more attractive to buyers in terms of payment in comparison to conventional. So whereas for a while, people with 680 score and above are better off conventional, and now that is going to even change more. So FHA is going to become a pretty good financing tool for a lot more people. And it's not always just for people that have credit challenges. It can be higher debt ratio. Maybe you had a bankruptcy or foreclosure in the past, but the more reasons people are choosing FHA tend to be higher debt ratio. There's more flexibility there with those kinds of things. And now in the Twin Cities, we can go up to $515,200 for a loan size, which is crazy high for FHA. I know conventionals above 700, but for first-time buyers, it's a very welcome change because they need all the help they can get in this market with higher prices, higher interest rates. So we can lower their mortgage insurance premiums monthly and get them into something that gives a little flexibility on debt ratio. So
nice. And now you can do a 1 to a 4 unit with FHA, correct?
Yep.
And condo townhouse?
Yes, we can do condos, townhomes. We do spot approvals on condos. We're doing one right now for somebody. So even if the HOA isn't approved, we can just do a spot approval on that one unit if they meet normal HUD requirements. So there's some creative things we can do there. We do Minnesota housing, so we can do down payment assistance in conjunction with the FHA loan. And we have a multitude of other down payment assistance we can do as well. And so there's a lot of really cool things we can do. So if you're thinking about even long-term things, if you want to be an investor long-term, maybe move into a duplex now. Duplexes, you can go even higher on 2, 3, and 4 units. But you could live in the property now, turn around, rent it out later on down the road, and you're getting into an investment property with very little out of pocket. So that's pretty cool.
That's a great way to go. I remember I started selling homes when I was 21. I'm a little bit older than that now, and a lot of my buddies, that's what I sold is to them, where at that time were duplexes, and then one of them lives out in Lake Minnetonka now because he was able to live for free for many years in his duplex.
Yeah.
Yeah, so it's a great plan. With regards to FHA now, FHA allows for co-borrowing. So if a parent, for example, wanted to buy a duplex for their student, that was something that they could do, and the student could live off campus, let's say by one of the colleges, correct?
I would have to look through the guidelines to be sure. I know on Fannie, we can do that. With FHA, the student one, I'm not sure, but you can do non-occupant cosigner. So you can get creative with that and do it a little bit different way. And yeah, absolutely can do the non-occupant thing. We do that a lot for co-signing.
So if a parent does want to help a child or own an investment property while they're in college or going to grad school and not spend, $100,000 in rent, they could go ahead and buy a property for
Yes.
them, or with them, or in conjunction, or however we want to say it. And that's something you'd help them figure out which loan works best.
Right.
Also, like with regards to somebody with light credit or no credit, but a score, where they might require manual underwrite, that's something I believe FHA is pretty friendly with.
Yeah.
Have you done that, Karli?
Yeah, so we can do very low scores, we can do no credit scores, no credit. We can do all of that with a manual underwrite. So manual underwriting just means it's a little different guidelines in terms of the regular. Maybe we have to show more reserves, or we have to have some compensating factors. Maybe there's some income that we're not including because the spouse can't be on the loan, or whatever the case may be. So there's a lot of different things we can do to get creative with that financing.
Awesome, awesome. Well, with the drop in the mortgage insurance, so mortgage insurance with FHA, unless you put more than 10% down, does stay on for the life. However, you'll get a better payment, and FHA still does ARMs, correct?
Yes, yeah. Now, ARM rates right now are, I could talk for an hour more about interest rates, but the ARM rates are not quite as attractive as they used to be when you were comparing ARMs to fixed. My first mortgage was an FHA ARM, a 3-year ARM, and it was in the 6s at the time, which was far better than the 8s for fixed rates. Right now, you're not seeing that big of a difference between the two for FHA, but it is available, and it might become more attractive on the secondary market once this rate environment settles down a little bit and stays stable for a bit.
Sure. I remember way back in the day, and I don't know because I haven't done an FHA ARM for a client in many, many years, but are they still 1-1s, like a 5-1 versus a 2-6 or a 2-5?
Correct. Yep.
Okay.
So there'll be a fixed period, maybe 3-year, 5-year, and then it adjusts every 1 year thereafter.
Okay. So in a maximum of on the FHA ARM, is it 1% or is it variable?
I'm in the same boat as you. I haven't done an FHA ARM in a long time, but I believe the cap is going to be it might even be 1% per year. I'd have to double check, so don't quote me on that, but usually the lifetime is 5.
Okay,
cap.
so much more attractive ARM hypothetically than in a conventional ARM if you're looking for an ARM. A lot lighter on the credit scores. Depending on your credit overall, lighter on the MI, because if you have lower credit scores, you're going to get whacked on the conventional PMI generally.
And with the conventional, the loan level price adjustments, if anybody's heard about the changes there. So Fannie and Freddie implemented these, which was intended to help first-time buyers with low to moderate income, but it's hurting a lot of conventional buyers that have better credit scores, where it's making FHA even more attractive in terms of interest rate. So I think we're going to see a lot more FHA buyers coming through because it's just a lot better program for them. They can put less down. We can do renovation financing too. We can finance up to 110% of the subject to completion value. So there's lots of really cool things we can do with an FHA loan that we can't do with other loans. So
beautiful. Yeah, I remember back in '86, that's when I started. FHA was the predominant source, and at that time the loans were maximum was under 100.
yeah,
if you remember those days.
yeah, right.
And then during the financial crisis, the last recession, when liquidity and the mortgage market was nowhere, FHA was the loan of choice. We kind of dusted it off, and that's how we got all our deals done, for 3 years.
Right.
So,
yeah,
so yeah,
it's one of I love doing government loans personally. I like the different nuances, and I feel like it's a great tool for a lot of first-time buyers. And not, it doesn't have to be a first-time buyer. It could be anybody,
sure.
but yeah, I'm excited to welcome it back in and have more people be accepting sellers included, and being able to go to higher price points should make it easier for properties to qualify. But if they don't, we can always escrow for weather-related repairs, things that might come up like chipped and peeling paint, things like that. Or we can do renovation and maybe add some carpet and cabinets and things like that after the fact.
Awesome. Well, I agree. It's an oldie but a goodie. And
Mhm.
being that you are very experienced in the FHA world, a lot of, during the refi booms and during the good times, just like in my industry, the real estate side of things, you get a lot of people that come in with a lot of, with not the depth and breadth of experience in in terms of transactions and products, and yourself being very well versed and even having done your own or having had your own FHA loan, you speak to it from doing it every day, but also having lived with one yourself and had a positive experience. And so that's going to separate you and your company from many of the other lenders. And uh, I always tell people, we're not a commodity, and experience does make a difference. And, an average buyer might buy a home, once every 5 to 7 years, maybe 3 to 5 homes in their whole lifetime. You're doing this daily, I'm doing this daily. And so if they pick their best friend, or, let's say that, nothing against the company down the street, but that loan officer or realtor may not be able to guide them appropriately, and it's going to cost them the same. So why not work with the expert? It doesn't cost any more to work with the best, I guess is what I'm saying.
Right.
And
Exactly.
you're free to talk to, I'm free to talk to. So give
Mhm.
us a call, interview us, see if we can't help you out. And FHA is just one of the things that you do. You can do a plethora of loans and
Right.
the down payment assistance loans.
Mhm.
So
Right.
a lot of the other smaller companies and some of the banks aren't approved with the down payment assistance loans.
Mhm.
And so if you don't talk to the right person, you may be told you have to rent when
Right.
actually you could buy. And
Yes.
I can't tell you the number of people that have been misguided through talking to the wrong people. So Harley, you are available. You are a resource. You are wonderful. If people want to talk to you, how can they reach out and give you a call or email? What's the best way to be in touch with you?
Yes, you can text me directly at 651-242-8333. And you can email me at carly@thesparteam.com. And John will put that in the comments for you. And our website, we do have a lot of information there, especially for first-time buyers, is just thesparteam.com. There's
Oh,
mortgage calculator and a variety of other things out there.
Carly, I know how to spell your name, but could you spell
Yes,
Carly and Spark? So could you give us your email and your website phonetically so people can
yes,
write that down? So grab a pen,
a-
everybody. Here we go.
absolutely. It's Karli, Karli, at the Spar Team, which is THESPAHRTEAM.com. And the website is thesparteam.com. So THESPAHRTEAM.com.
Beautiful. Thank you. Thank you. And then now you and I are physically in Minnesota. However,
Mhm,
I am licensed in Minnesota and Wisconsin for my real estate license.
mhm.
So that's it for me geographically. I can give referrals across the country, but those are the two states I sell in. How about yourself? If somebody is watching this video on YouTube and they don't live in Minnesota, can you still help them?
Yes, absolutely. So speaking of Minnesota and Wisconsin, I'm a Wisconsin girl, born and raised. So I do down payment assistance. I jump over the border quite a bit, and those programs are very different. So you do really need to work with somebody who knows those programs inside and out, especially if you're married. There's a lot of nuances with marital property standards that are different between the two states. But we also are specifically licensed in Florida. So if you're trying to get somewhere warm in the winter, we can help with that. We are licensed in Iowa, and then our team is licensed in all 50 states. So
Okay.
we have a resource wherever you need it.
So call you, you'll take care of them. If you can't take care of them directly, you'll have somebody on your team take care of them
Correct.
all across the United States. So wherever you're watching this video, Carly does Zoom. We're doing a Zoom right now. And
Mhm.
she's very easy to communicate with. No pressure and tons of information, and I know you'll enjoy working with her. So Karli, anything else you want to say to the audience before I close this down?
Well, it's just a matter of, get rid of the stereotype when it comes to FHA. I think there's been a lot of that, especially in the last several years, because sellers, for good reason, wanted just conventional buyers because they could pick from 20 offers or whatever the case may be. But I think there's often a misconception that FHA is not a solid buyer. And I think that's misconception is going to be even bigger right now, or the opposite way, because it's going to be more attractive for people. So just keep an open mind, whether you're a buyer or seller. And no, FHA doesn't mean your credit's bad or you're a bad borrower. It just means you're choosing something with better financial terms that fit your situation. And we'll definitely do the comparison for you to make sure it makes sense. And
Awesome.
yeah, just make sure you get pre-approved before you find your dream home. Always.
Agreed.
So,
Agreed. All right. Well, thank you for stopping by today, Karli. Appreciate it. Everybody give
thanks for
Karli a
having
call.
me.
Thank you.
Thanks.